Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, September the 5th, the year's 2021. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And we're entering the first full trading week. Well, actually, it's not a full trading week because tomorrow's Labor Day. So let's just remind ourselves. Always have your risk management in place. Don't lose any more than you're willing to lose on any one single trade. So pulling up the weekly chart, you can see that the pound really hasn't done much, only about 22 pips of range. But as we look down the gap column, all of the gaps have filled. You can see here that the pound's above the previous day's pivot point at the morning, or at the moment, so I'm going to be thinking short. And we're putting in the opening range for the week. You can see we're above the opening range for the month, and we are above the opening range for the year. Now, let's just scan through a few other pairs, just so, because other people would like to see where their pairs might be. So we've got the euro above the monthly opening range, but below the yearly opening range. And for dollar Canadian, you can see we're below the yearly and below the monthly opening range. For the dollar franc, you can see we broke through the opening range for the month today, and we're above the opening range for the year. And for the dollar yen, you can see we're below the range, opening range for the month, and we're above it for the year. So that gives you an idea where some of the other pairs are. Once again, the pound's 213 pips above the yearly open, 101 pips above the monthly open. Right now, we're just hanging around the weekly open. We're above the inside bars for the day and the week, but we're still within that monthly inside bar that happened last month. So a quick look at the monthly chart, you can see what the pound is doing there. Range, no pairs over 100. We are 6 hours into the trading day here on Sunday, but I would imagine there's just not going to be much happening. People are on their Labor Day vacation in the U.S. And you can see here we gapped down, filled the gap, and now we're heading back down. Not enough range for the rat zone. And the weekly pivot, 138.28. So we'll see if we hit it. Oh, and on the next chart, I think I mentioned I wanted to make a modification. Well, it was already there. The minimum that it missed the pivot by was 0.3 or 3 points or 0.3 pips, and the max was 61.4 pips. So I already have those misses plotted there, or displayed there, I should say. And so we've taken out the pivot. We missed the pivot on Friday. And if we look at the month, we can see, or the week, you can see we've got the weekly pivot down here at 38.28. And we've already taken out the monthly pivot. Wick zones, in and out of the upper wick zone. And the range, not much to say about the range. We already discussed last week what had happened. And so far today, just 6 hours into the trading day, that's not really that much to think about. And the wall-mall lines, I mean, with a 23 pip range, there was some action here at the beginning, but I think traders are going to enjoy their holiday weekend and not do much. Trading, that is. Looking at the daily chart here, the highest low and lowest highs. Once again, using this, even on the daily chart, you can see where you can take these trades. If your position size right, they usually wind up paying off. So does it work every time? Of course not. In fact, that's something I wanted to mention. I was in an email conversation with a trader, and there's something that some traders, I guess, take longer than others to realize, and that is in trading, even though you follow your plan, you still might lose. Even though the statistics are on your side, you still might lose. Even if something looked exactly the same as before, and before was a winner, and you do it again, you still might lose. And it's almost like they haven't made the decision or come to the realization that they have to accept some losses as part of trading. Because, you know, it's one thing to look in hindsight, and, we talk about Harry hindsight every now and then, but it's a whole different, scenario if you're Ricky real time. You're trading in, or Robert real time. I forget what name we use. But, if you're trading in the moment, and you're living and dying by each tick, you realize that sometimes price is just going to move against you. And depending on how tight your stop is or how wide your stop is, maybe you get wiggled out of the trade or stopped out of the trade. Maybe you don't. But to expect there to be something that guarantees you're going to win every time you place the trade, that's just not a realistic outlook for trading. It just isn't. And many traders get stuck in that loop. Oh, maybe if I add this indicator, maybe if I switch pairs, maybe if I do this. And the thing is, they're only making matters worse. Because usually something simple in trading is going to beat something complex. Usually. I've seen traders, they go through so much, to create a winning system. But the reality check is, once you put that trade on, doesn't matter the reason why. The market's going to do what the market's going to do. And it might smile upon you and give you an opportunity to take profit, or it might frown upon you and just go the opposite way as soon as you click the mouse. You just never had an opportunity to get out of that trade with a profit. And so, what you might want to do is start tracking. You put a tick box. Okay, I entered the trade and I put a tick box. It gave me an opportunity to take profit. Let's say it gave me an opportunity to cover the spread. Either it does or it doesn't. And then so you can see how many times your entry doesn't give you that opportunity. Now, if you get in a trade and it goes up 3 pips, but you don't take the 3 pips and it goes against you, that was an opportunity. So you might even want to have a column and add a column so we'd have, number of trades, trade entered, opportunities to take a profit or at least cover your spread, and then opportunity taken. So you can then see what the ratio is. Maybe you're not taking the opportunities. Now, You're just going to have to wait and see. So for example, let's say you get in a trade, you buy, and it goes up 3 pips and you don't take it. And then it goes down, it moves back 7 pips. Not enough to stop you out, but now you're down by 4 pips, right? And then it comes up and it gives you a second opportunity. Well, that's like 2 opportunities on that trade, but you don't take it. And then it comes down again, goes against you. Then it gives you maybe a third opportunity. You need to see that maybe you're not taking profit as it presents itself. Because say you got a couple of, you could have had 2 3 pip wins, and maybe on that last one, maybe you get 4 or 5 pips. Well, you're leaving money on the table that way, because I know what you're thinking, because I think this way sometimes. You're up 3 pips, you're looking at the chart, you're thinking, oh, it's going to go up to, this level up here. It almost has to. And then all of a sudden you're looking at, minus 2 pips when you were up 3 pips. It can be frustrating. It's like, dang it, right? And then it does it again. And then maybe sooner or later you are right. Or maybe the second time you get out with 2 pips because you had that emotional and that mental anguish of having pips in the on the table that you could take, but you didn't take them. You didn't grab those pips, and it went against you. So now you jump out, and lo and behold, you jump out at 2 pips because it hesitated, and then it runs up another 4 or 5 6 7 10 pips. Now you're really ticked off. Well, you see, what you were probably doing was you were managing your emotions rather than managing the trade itself. Because maybe it was leaving clues, maybe it was making higher lows and higher highs. But rather than notice that and let price, move up and down like it does, you're thinking, oh, I want those 2 pips. Oh, I'm out of that trade, only to see it continue higher and higher and higher. So that's just something that you as a trader is going to have to work on. I mean, if we look at, we can go to like a 1 minute chart here. Let's see if we can see it. I mean, let's see if we can find something here. Well, let's say you looked at this low. Let's see that. No, this low right here. There's a higher low. And then maybe you took that trade and it did this, and then you decided not to get out. Then it runs all the way up here, where here's another higher low trade right here. So right there, you missed out on an opportunity. Market's giving you a second opportunity. Maybe you take it, and maybe it comes back. But see, if you'd taken those pips there, it came back, and there's another at that same higher low level, gives you a huge opportunity. Maybe you take it, maybe you don't. And that's just types of things you have to look at when you're trading. So if you keep statistics of those opportunities, then you might go, if I just sit here and constantly just take, if it gives me 2 pips, I'm just going to take them. There's a 1 ball there. Maybe that's your clue to take it. And then here, there's a 1 ball there. Maybe that's your clue to take it. And it comes back up here and falls back down. And you see it just dropped, came back up, but not quite to that point. Then it just dropped on through. Because it's sometimes, price does these pullbacks on you. Because see right here, you might have been up the same number of pips, but maybe you had a gut feeling or instinct or something says, it really needs to come down to this level. I mean, Walmart and I, we talk on the phone, and I was like, I know it's got to get there. It's a return bar or it's something. So for example, here I'd be looking, this kind of looks like a return bar. And lo and behold, it got back to that open. So I hope some of that might have helped that one trader out there or any trader, because it's, you got to make sure you've got your mind under control, because it's not what you trade, it's how you trade it. So I want you to go out there and drain the banks. But before you leave, click that like button so maybe these videos get bumped up in the YouTube algorithm. So this is TheRumpledOne, over and out.